All right, it's 9:01. Good morning, everybody. Thanks for dialing in this morning for this month's Industry Hour with Scott Kennedy from Graybar. So today, Scott's going to give us a market forecast info presentation. And then at the end, he's going to open it up for questions for those that are here. This will be recorded and will be placed on the chapter's website. So please feel free to revisit at your leisure or share with your coworkers. With that, I'm going to turn it over to Scott and let him take it away. There you go, Scott.
Thank you, sir. Good morning, everyone. Scott Kennedy, I'm Director of Electrical Sales for Graybar. Here in the region, also have Walt Nakora, our local manager, area manager, I should say. You want to say hello, Walt?
Good morning, everyone. Sorry about that. I had it on mute.
No worries. No worries.
Thank you.
So we'll go ahead and get started. I would ask that you please stop me and ask questions. We're going to talk to a couple market resources that Graybar uses nationally. You see IHS Market, Dodge Data and Analytics. We also use DISC, and I'll make sure that I reference which of those sources I'm using as we work through the presentation. So we will go ahead and get started. And the picture in the first couple of slides doesn't look so rosy, but I promise it gets better as the presentation goes on. So we'll start with the U.S. macro outlook. So IHS Market has revised down their forecast for real GDP growth. For 2022 from 3.3 to 3%, independent of fallout from Russia's invasion of Ukraine. Revision mainly reflects new data for the months preceding the invasion that suggested both a weaker Q1 than previously anticipated and a weaker monthly profile heading into Q2. And obviously, this is direct from IHS Market. Like I mentioned, GDP growth slowed in Q1, but their expectation is it's going to accelerate into Q2 and the second half. And they show firm growth in 23 and 24 with an average of 2.7% across both years. And there's a whole host of other things that they mention here. Words like capital deepening, non-residential fixed investment, and cyclical rebounds in both productivity and the work week. But the bottom line is GDP looks solid in the second half of this year, even though it's a revised forecast, and also solid in the next 2 years. They expect price pressures to ease and annual inflation rates to decline. CPI, obviously the Consumer Price Index, projected to rise this year, but then as commodity prices decline and the supply chain issues that all of us are dealing with improve, they see it as 2.6 next year, which you can see on the slide, and 2.1 in 2024. The executive summary, obviously the Russia-Ukraine conflict caused an unexpected disruption in the supply chain, surging costs, slower, more expensive modes of transportation, and longer delivery times, which all of us have seen across the business, particularly in certain areas of our business, which I'm happy to discuss at any point if people have questions regarding that. The supply chains were already hard pressed by the pandemic, and this conflict has further exacerbated some of those issues. Construction industry and the economy as a whole need to continue to maintain sustainable growth to stay on schedule for a full return. in spite of the potential economic risk that you see across that slide, which I realize is an eye chart to a certain extent, economists, including IHS Markit, expects the stressors of 2021 to subside here in 2022 as we move into 2023. And I certainly have my fingers crossed that is the case. That progress should be a good foundation for the construction industry as a whole as we move forward. So from a labor perspective, you can read the chart, or excuse me, the line graph that's in front of you. 650,000 more workers needed this year than were employed in 2021, and 590,000 next year. So obviously additional labor needed, and labor certainly has been a challenge, across our industry, and certainly from a distribution perspective. Supply chain disruption. This slide speaks specifically to freight. When we talk about price increases in our business, most of the suppliers that we deal with as a distributor, obviously they've been impacted by raw material, which everybody's aware of, but freight has been very impactful as well. Obviously the cost of fuel is up, everyone's well aware of that. But freight rates in general are up, as you can see, 42%. And then the time, lead time, wait time, for truck power, as they put on the slide here, has certainly increased. And there'll be a note in a coming slide that the shortage of trucks in general, for every one driver for every 5 available loads. So we talked about a labor shortage in the construction industry. The trucking industry is seeing a similar challenge. And that was a challenge, honestly, that was a discussion on the distribution side going back to 2019 pre-pandemic. So obviously the pandemic has exacerbated that situation as well. Supply chain disruption, we're going to continue talking about that. The Russia-Ukraine conflict, some of the new challenges it's introduced. It's an important exporter of commodities for some critical minerals. It's also an important exporter of copper resources, with its refined copper accounting for 4% of the world's output. And you say to yourself, well, geez, that's only 4%. But when you take 4% of the supply out of the marketplace, it certainly has an impact. In addition to copper, concerns about the impact of nickel. I don't know, for those of you that have read recently, the nickel market obviously has been volatile, to say the least. And aluminum, we can speak from experience that aluminum on the whole, price increases have been very aggressive, directly related to the Russia-Ukraine conflict. And I believe the stat that I saw was 12% of the world's aluminum supply comes out of Russia. And again, you say to yourself, 12% doesn't seem like that much, but when you take 12% out of the available supply, it certainly has an impact on the overall market. Electrical product pricing. This slide, this chart, comes from electrical marketing. And you can see all the product categories, which all of us deal with, either from an installation or distribution standpoint. Percent change from 1 month change 0.6%, or excuse me, 1.9% on average on the total index, but 19.7 from March of 21. So a 20% increase across that, we'll call it a market basket of different product categories. That's significant. We'll get a little bit more local here, and we'll talk a little bit about the Penn-Del marketplace. So what you see in front of you is what we call a heat map. It's all the counties included in the Penn-Del footprint. I apologize for the South Jersey counties. I recognize that's not included. We include as a part of our trading area for Philadelphia, so it was difficult for us to pull those counties out. But you can see at the top, this is a reference to DISC. And DISC is a tool we've used for a very long time to measure market potential and then our share against that market potential. So you see the market potential by year for construction, institutional, industrial, and utility. And the numbers you see are the total market potential according to DISC by year for the next 4, or I should say 3.5 at this point. 2022, DISC expects 5% growth in this footprint. 2023, 2%. 2024, 3.1. 2025, 5.2. Combined annual growth rate for the entire region, just a shade under 4 at 3.825. So more traditional growth rates that we all saw pre-pandemic versus the last 2 years or the last 18 months. Well, I get a little bit more specific. We did some breakdowns into our Allentown region. CAGR is roughly the same, 3.75 for that footprint. Harrisburg, so the center of the state, 3.45 for that footprint. And then Philadelphia, the counties we consider to be the Philadelphia trading area, 4.1% is a combined annual growth rate between 2022 and 2025. Further breakdown, 5.4 this year, 2 next year, 4 in 24, and 5% in 2025. And for those of you that work in Delaware, what's shown as our Delaware trading area, the combined annual growth rate, 3.4%. Any questions around the market potential for these markets from anybody on the call?
I'd just add, everybody has the ability to unmute themselves. So if there are any questions, please feel free to unmute.
Sure.
Thanks, Scott.
Thanks, Rob. We'll talk a little bit about construction starts. And this data for us comes from Dodge. So this data is it's updated as of the fourth quarter of 2021. From a Graybar perspective, we use Dodge, the Dodge pipeline. So we identify, prioritize, and act on key projects utilizing Dodge. They also have a market forecasting service, which projects construction starts in the year that they begin. Starts typically lead overall spending by 12 to 16 months. What you will see in the chart is the large drop in starts in 2020, and then a solid recovery in 2021 and going forward. And again, this is national construction starts. But their expectation is national construction starts, so we'll make further progress over the next few years and are expected to grow 8.7% in the current year, and then continue to grow over the remaining years of the forecast and reach 1.182 trillion in 2026 for the first time. And that's it's roughly 48% above the 2020 low. So that's a pretty positive picture for construction starts nationally. Penn-Del specific, the Penn-Del region construction starts and 2022 growth. As you can see in front of you, Dodge is showing construction starts in the Penn-Del footprint up 24.6 for 2021, and obviously that's the year past, and up 13.5 this year, but continued solid growth until 2026, where there's just a slight decline. That high level, that 24 billion dollar mark is maintained in those years. And you can see at the bottom, there's a further breakout by residential, commercial, etc. I don't need to read all those to you, but you can see significant growth in commercial, institutional, and also utility. Utility has popped up as a growth area for those of you that are involved in the utility business. And this breaks things down just a little bit further and goes into, you can see the total number on the right in gray, then the growth expected this year. Obviously, you have significant growth in education, office, which is encouraging. See parking garage there, along with the other categories. So the construction starts look positive for this year in the years going forward. And then our last slide for breakdowns by county. Obviously, Philadelphia, the largest. I was surprised to see Sussex. Obviously, that's the southernmost county in Delaware. I would assume that's residentially based starts. BSC Newcastle County, Delaware coming in third, and then Montgomery County, PA coming in fourth. And you can read the balance of the counties. So things look positive here in the next, in the coming years in terms of construction starts, and business overall with mid-single-digit growth through 2025, 2026. So obviously my hope is that what was provided here is of value. If there are any questions, I'll certainly take them. I'm happy to talk commodity trends if anybody's interested. Certainly willing to share what we're seeing from a Graybar perspective. Thank you.
All right, thanks, Scott. If there are any questions, please feel free to unmute your mic or use the chat feature. So we'll give it a minute, see if anybody wants to speak up.
You said, Rob, you said this will be available on the website?
That's right. So after this, I believe Scott said he would share this presentation, and I'll email this out to you. And then the recording will be on the chapter website as well.
Yes, we're happy to share it. So,
anything else, Dave?
No.
All right, thanks. Any other questions from the audience? Hearing none, really just want to thank Scott for your time and Graybar's partnership with the Penn-Del-Jersey Chapter. We have a great relationship with you all, and I know you all are NECA National Premier Partners, so we appreciate all you do at the local level for us. I just want to thank everybody else for hopping on this morning. I will be sending a follow-up email with a review form for the session today. And then I want to bring your attention to the June 9th Industry Hour, which will be with Cohen Siglius on construction law training for electrical contractors. So hope to see you all in June. And if I don't, hope you all have a great summer. And thanks again to Graybar and Scott. Everybody.
Thanks, everybody. Appreciate your time.
Thank you.